Hello and welcome to the View from ADB in Yokohama, Japan. Today I'm joined by Ms. Arundhati Bhattacharya from the State Bank of India, the chairman of the State Bank of India. Thank you very much for joining us.
You're welcome.
So one of the, biggest news regarding your bank in the recent months has been the acquisition and merger of the 5 subsidiaries of SBI. In terms of the key rationale to do that, and also the effect, some studies have shown that the overall NPA, non-performing asset ratio, has gone up after this merger. How is SBI going to deal with this?
Well, first and foremost, I think the merger makes imminent sense. We were 6 banks doing the same thing in the same geographies, literally competing with each other, undercutting each other. It doesn't make sense when at the end of the day, the bank was owning most of the stock of these banks. In fact, 2 of them were fully owned and the other 3 majority owned. So it made eminent sense for us to bring it all together. The second thing is, in the recent past, in the last 2-3 years, we've been doing a lot of things in improving our risk management practices, in improving the level of digitization in the bank. It was becoming increasingly difficult to have the same processes rolled out 6 times over. Not only difficult in times of time, but also in times of money. So this was really not a very efficient process. The other thing I think, that is going to happen is, when you put it all together, a lot of the overlap will go away. So instead of 6 treasuries, we'll have 1 treasury. Instead of 6 corporate offices, we'll have 1 corporate office. And you can imagine the kind of overlap. These 6 banks or 5 banks were employing 200 people in their treasuries. Today, the expanded treasury has only taken 20 of those guys. So 180 very good quality people are now released into the system for posting elsewhere. So to that extent, even our shortage of skilled people is going to be addressed by this merger. The other thing that is very important in this merger is these banks were having a higher cost of funds because they were not able to source deposits at the rates that we were sourcing. Once it all comes together, the cost of funds also comes down. So I think in every which way, whether it be efficiency, whether it be productivity, whether it be costs, whether it be the level of digitization, or risk management, in every which way, this is the best thing. As for NPAs, now when I do 1 resolution, I will resolve for all 6. So though the initial numbers may have gone up, see, at the end of the day, if they had these numbers, then we also had to own up to it some way or the other. We had to provide them the capital. So it is better that we have a bigger say and a better control of the resolution process. So to that extent, I think this merger was very much required. It has been done in an extraordinarily well-coordinated, planned manner, and I hope that we will be able to show it in the numbers going forward.
And another key event generally for banks across the country was obviously the demonetization policy that was rolled out. As soon as it was rolled out, there seemed to have been quite a lot of chaos in terms of rolling it out through the markets. Many analysts say that it actually cost India a few percentage points in terms of GDP. What was the effect for a bank like yourself, which is the biggest bank in the country?
I would say, there were two impacts which I think were really very good. One, of course, is that the amount of resources available to the banking industry went up. When it all started, in the very initial days, we had thought that whatever deposits come in, around 80-85% of that will flow out. Later on, we revised that estimate to say that around 60% will flow out. Today, as I'm sitting here, I have found that only about 45% has flown out, meaning that the resources, lendable resources of the banks have gone up to the extent of around 55% of whatever we garnered during that period, which is not small. So if you look at all of the big banks, their ratio of low-cost deposits, that's what we call the CASA deposits, current and savings account, every one of them have shown increases of 100 to 300 basis points. Again, that really improves and improves the profitability of the banks. The second impact, that is also something that we must appreciate, is the use of the digital channels. At the time when the demonetization was on, the use of digital channels went up hugely. And we were aware that, it could not stay at that level once cash came back in. But even after cash has come back in, the levels at which it has settled is far more than what it was before the demonetization. So we have really done about 3 years worth of work in bringing digital to the people in that 60 days, which again is not a mean achievement. So I think these are some of the good things that have happened. Of course, during those particular days, there was a lot of pain. A huge amount of work had to be done. We had all of 24 hours to prepare for it. And considering that that was the very little time that was given to us to plan that entire exercise, I think the chaos was very minimal.
Considering, yeah. Okay, and finally, I guess, an issue that is almost a leitmotif in India. There's a question of how to tackle the large pool of non-performing assets in the banking sector. There seem to have been more discussions in the central bank lately, but a lot of market participants still remain a bit, I guess, disappointed by the lack of real action. There still seems to be a lot of talk about this. What is your opinion about the latest discussions about this question?
See, in India, in respect of these huge number of non-performing assets, we have to realize the quality of this particular portfolio. One difference in this portfolio from portfolios in many other nations is that many of these assets are actually operating assets. Why are they non-performing? Because they are not in a position to generate enough in order to service the interest. And the reason for that is most of these projects have become over-leveraged because there has been time overruns on account of various reasons, assumptions going wrong, in the approvals not coming on time, sanctions given being rescinded. So there have been a lot of reasons for it. Now, as a result of this time overruns, there have been cost overruns. Now, depending upon the cost overrun, banks have given money in order to complete the project, but maybe the equity holders did not have deep enough pockets to bring their equity in. As a result, what has happened is because of the interest during construction, as well as the amount that was required in order to complete the projects have become over-leveraged. So what is really required now is to write down your debt and equity, ensure that the project has just enough debt to enable it to be serviced properly, and put these back on track. Once these are back on track, we fully believe in the next 2 to 3 years, as growth in India goes up again, many of these projects will be able to perform to capacity, at which point of time the haircuts that have been taken can probably be recouped. So this is something that is doable. Of course, it needs certain structures, it needs certain will of all of the players to get it done. I think both the government, the regulators and the banks are working towards that. And I'm very hopeful that this is something that will happen within this year.
It is solvable.
Sure.
Perfect. Well, thank you very much for your insight and have a good meeting.
Thank you.
Thank you.